Let's take a look at the Hawaii tax form. In the case of individuals like you and me, we probably fill out this form N11 since we're residents of Hawaii for the whole year. But if you're a part-year resident or a non-resident Hawaii, but you have Hawaii source income, then you probably will be filling out a form N15. So just like the federal, the first page has a lot of contact information, the same 5 filing statuses, dependent information. The first dollar amount is on the next page, page 2 of the 4-page N11 form. The first dollar amount is rewriting in the federal adjusted gross income. So in other words, you probably gotta have pretty much your federal return done before you can start on your Hawaii tax return. Then what we're going to do to this federal adjusted gross income is to add amounts that are not subject to federal tax but are subject to Hawaii tax laws. Some of them are kind of common, yeah? If you know a federal civil service worker, they may have COLA. Or if you have a state or county employee, they may have employee retirement system withholdings. And then we may subtract out income that is not subject to Hawaii tax. It's already in here on the federal, but not subject to Hawaii, so we're going to subtract it out. Stuff like maybe pension income that's employer funded or Social Security income. And the end result is to get a Hawaii AGI. Now from there, we're going to subtract out either the Hawaii itemized deductions. So again, maybe you didn't itemize on the federal return, but it probably is very possible you're going to do that on Hawaii. So the same categories of itemized we saw on that Schedule A, now subtotaled here on the N11 form. And we compare that with the Hawaii standard deduction. And look at how small these amounts are. So most times people can easily itemize on Hawaii, but still going to be claiming the standard under federal. So that's subtracted out, the larger of the two. And another subtraction on the next page is Hawaii exemptions. Exemptions kind of disappeared from the federal return from 2018, but are still here on Hawaii. So for each exemption you claim, that each person you claim, you may subtract out 1144. Maybe additional amounts for age 65 or older for taxpayers, or some optional amount if the taxpayer is disabled. And then you arrive at the Hawaii taxable income that you look up either on the tax table or tax rate schedule. There is a smaller amount for net long-term capital gains, but not as beneficial like we saw on the federal. And there are lots of credits for Hawaii. Most of them are the so-called refundable. There is even a relatively new Hawaii Earned Income Credit, which is a percentage of the federal credit. But that credit, at least for Hawaii, is so-called non-refundable. So it kind of goes through this Schedule CR. So just like federal, you eventually will either have an overpayment that's going to be refunded or credited to the next year, or a tax due. Where's my tax due? Amount owing here that you have to file with the federal return. Just like federal, you can have your refund direct deposited. Just like federal, you can also have a Hawaii Department of Taxation account debiting out of your bank if you owe. Again, most people file electronically, but if you do paper returns, you got to have the taxpayer sign the return, date it, and mail it in to the proper office that's listed in the instructions to the N11 form. And again, we have a section for paid preparers. Okay, but again, professionals need to fill that section out.